Whether you own a property in Spain or you're thinking about buying one, I'm sure you have seen or read something about the recent news that Spain wants to introduce a new tax for foreign buyers, specifically those who are from countries that are not part of the EU. Until now, all we had were rumors. But now things have changed. Just a few days ago, the Spanish government officially announced an incredibly high 100% tax on property purchases by non-EU buyers. In today's video, I will clearly answer to all of the questions that any foreigner buyer or seller, because this affects both parties, can have. I will explain how this tax can affect you, how to potentially avoid it, and also why I believe that this new tax is actually illegal under current European laws. This is the first of many videos that I will be doing about this new tax, so if this is a matter of your interest, I would highly appreciate if you subscribe to the channel, and especially if you share it on Facebook, WhatsApp or wherever, because there are lots of rumors about it, lots of people that have been talking about this new tax without knowing everything about it, and I can assure you that I'm one of the few people that actually have studied the law before opening my mouth. This said, let's go to it. I will go over the basic questions very quickly. What exactly is this new tax? This tax basically translates as an additional state tax on property purchases made by non-EU residents. The reason why this tax is causing so much controversy is because it's proposed at a very high rate, specifically 100% of the property purchase price. This means that if you are a non-EU resident, for example, American, Japanese, and you want to buy a property in Spain, you are going to pay double the price that you would have paid right now or 6 months ago. But let me emphasize one important point clearly. This tax is not currently in effect. What we have right now is an official proposal presented by the Spanish government to the Spanish Congress, what we in Spain call a proposición de ley or legislative proposal. It is crucial to understand this. It's still being debated in Congress, it has not yet been approved or entered into force. If it eventually passes, it would still face strong legal challenges at both Spanish and European courts. Who exactly would be affected by this tax if it finally gets approved? The new tax targets specifically any buyer who has their tax residence outside of the European Union. As I said, if you're American, if you're English, but the criteria is not your nationality but your tax residence. This means that even a person who has a Spanish passport but has their tax residence in the US, in Australia, in Colombia would fall under this new tax if it finally gets approved. Of course, remember, the tax hasn't been approved yet, and the text that we have right now can be modified in many ways. But if we take into account the proposal that the Spanish government did, this is how it would work. But not everything are bad news. These are the exemptions to the new tax. If your official tax residence is in Spain or any other EU country, if you purchase property through a company legally based and resident within the EU, including a Spanish company, even if you yourself are a non-EU citizen. And third, if you buy a newly built property directly from a developer. In Spain, this is subject to VAT, not the transfer tax. This is the most important part of the video, and I'm going to explain you how this tax is going to be calculated, and it's important that you pay attention because this has created a lot of confusion. Honestly, it's understandable. If you look right now on YouTube or Facebook, you'll see dozens of videos from people, even professional law firms, talking about this proposed tax, often giving information that is not fully accurate. Here's a blog post from an English firm that works in Spain. I don't know them and I'm not questioning their professionalism, but even here they are stating clearly that this tax would just slightly increase your existing transfer tax, implying it might rise from something like 7% to 14%. But that's simply incorrect. In fact, until 3-4 days ago, we didn't have the proposal law in hand, so everything that was talked until that date was just rumors and people's beliefs, but nothing that had to do with reality. That's why I beg you, when it's about buying property or taxes in Spain, that you follow people. It can be me, for example, or I'm sure that other people also do it, but they have to be reliable. They have to talk based on information that is official or, well, you understand me. So let's continue. So, if this tax is eventually approved, how would it actually be calculated? The proposed tax would be designed as an additional complementary tax with a fixed rate of 100% of the total purchase price of your property. Here's exactly how it would work. First, you would pay the standard property transfer tax, typically around 7% to 10% of the property price, depending on your region. Then, you would calculate this additional tax, which would be 100% of your property's purchase price. And lastly, from this huge additional tax, you would subtract the amount already paid as a standard transfer tax. As you're seeing, the new tax is completely scary, but please stay until the end of the video because I have a few more interesting things to say. But before we continue, I just want to let you know that I work alongside my father, a lawyer and tax advisor in Spain with more than 30 years of experience. We have our offices in Moraira and Denia. And what do? We assist clients when buying or selling property. We give tax advices. We also do taxes for non-residents. So if you want our service, just send us an email or you'll find a link on the description to book a consultation with us. This said, let's continue. Can I actually legally avoid this tax when buying property in Spain? When someone buys the property in Spain, there are two main ways of buying the property, as an individual or through a company. This is the interesting option. Why? The proposal explicitly excludes purchases made by companies that are legally resident and established within the European Union. Even if the real owners behind that company are non-EU citizens, if the buyer itself is an EU resident company, this additional 100% tax wouldn't apply. One particularly strong and legitimate solution here is to create a Spanish SOCIMI. Now, a SOCIMI is basically a special type of real estate investment company based in Spain. Its primary objective is investing in properties, typically for rental purposes, and it benefits from very favorable tax conditions. Well, I'm making this video May 2025 because in the future we'll see what happens with SOCIMIs, but this is a matter of another video. The reason this structure would be interesting in this case is very simple. A Spanish SOCIMI is always treated as a tax resident entity within the European Union. As a result, the SOCIMI itself, when buying properties, will pay the normal property transfer tax or VAT if applicable, but crucially, it would never be subject to the new 100% foreign buyer's tax. To make this more clear, let me give you a practical example. Imagine a couple from the United States or Canada planning to invest in several properties here in Spain. If they purchased these properties individually under the proposed rules, they would be hit directly by this huge 100% additional tax. However, if instead they decide to create a SOCIMI in Spain, even though they live outside the European Union, they could have this Spanish SOCIMI buy the properties for them. Because the SOCIMI is based in Spain and is therefore an EU entity, this special 100% tax simply wouldn't apply. Of course, setting up a SOCIMI does involve some initial steps, such as minimum capital, listing on a regulated market, or distributing dividends, but especially if this tax comes into reality, the advantages of the SOCIMI outweigh the bureaucracy or procedure of setting the SOCIMI. And actually, even though the SOCIMIs can be more attractive in the future, let's say that in the last years, lots of people use companies to buy properties in Spain already. My father basically dedicates himself to these kind of cases. So I won't say that you have to contact us, but you know how it works. Okay, at this point you might be wondering, alright Daniel, I understand what's this tax about, how can I potentially avoid it, but honestly, if this tax gets approved, come on, how is going to get approved 100% tax? This has to be illegal, right? Yes, I believe that this law goes against the Spanish Constitution. Not only that, but also European regulation. Let me explain. The first issue is related to the Spanish Constitution itself. According to Spanish constitutional law, any tax imposed must respect the fundamental principle of non-confiscation. Simply put, the government cannot impose a tax that's so high it effectively takes away the entire value of your investment or property. A tax rate as high as 100% of the property's purchase price would clearly seem to cross that line and be deemed unconstitutional. Secondly, and equally important, there is a direct conflict here with European Union law. Specifically, EU treaties clearly prohibit any measures restricting the free movement of capital between EU countries and non-EU countries. Real estate investments, such as buying property, are explicitly protected under these rules. As a tax advisor, and more important, as someone that works alongside a lawyer that has been dealing with international taxation and real estate transactions in Spain for over 30 years, I can confidently say that if this proposed tax gets official someday, it will be automatically challenged first to the Spanish Constitutional Court and then to the European Court. Of course, I cannot guarantee it, but if we see what happened with some other taxes in the past, well, this tax is just crazy. I cannot say nothing is going to happen because the truth is that it can be enforced, and while the courts are dealing with this matter, this tax can be a reality, but I'm pretty sure that it's not going to be as they proposed it in this law. I hope you found the video interesting. As I said, if you want to contact us for any service related to property or taxes in Spain, you have our email and contact here and in the description and pinned comment of the video. I would really appreciate if you subscribe, and you can make me any question about this tax. I will answer if I know the answer. If not, I'll tell A. As soon as I know the answer, I will answer. I think at the end, the work of a lawyer and tax advisor is being honest and straight with their clients. I hope you enjoyed the video, and I'll see you in future ones. You can also check some other videos that I made about wealth tax, some other laws in Spain. I'm sure that you'll find them interesting. Also about tourist rentals, that there are also news about it, and I will be talking about them very soon. See you soon. Bye bye.